Hook. Hey everyone, did you know that a 50 basis point cut by the Fed could send the market spiraling down by as much as 10% in just a week? Yeah, you heard that right. Let's dive into this shocking news. Introduction. Today, we're talking about the Federal Reserve and the buzz surrounding a potential rate cut. With all the chatter about economic stability and inflation, you might be wondering why this matters. A rate cut, especially one as significant as 50 basis points, can shake things up in the markets. It's crucial for investors, homeowners, and anyone who's keeping an eye on the economy. So, let's break down what this could mean for us all. Presentation of problem/challenge. Now, let's set the stage. Investors and economists are on edge right now. Rising inflation has been a hot topic, and many are worried about its impact on economic growth. With prices going up faster than wages, consumer spending might start to slow down. And when that happens, we could see some serious instability in the markets. Some experts believe that the Fed might cut rates to combat these issues and provide some relief. But the big question is, will this move really help, or could it lead to more problems down the line? It's a tricky balancing act, and many are concerned about the long-term effects. Exploration/development. So, what happens if the Fed does go ahead with that 50 basis points cut? Well, let's break it down. First off, a cut like this could lower borrowing costs for consumers and businesses, potentially boosting spending and investment. Sounds great, right? But here's the kicker, with lower rates, we might also see increased inflation if too much money starts chasing too few goods. The stock market might initially rally on the news, but then we could face some serious volatility as investors reassess the risks. Now, let's get into some expert opinions. Analysts are divided. Some believe that a cut could stabilize the markets and prevent a recession, while others warn that it might just kick the can down the road. If consumer confidence dips, spending could plummet, and that's where the real problems could start. We might even see a shift in interest rates affecting everything from mortgages to car loans. It's a complex web, folks, and the implications are far-reaching. Climax/key moment. And here we are at the key moment. Following the news of a potential rate cut, the markets reacted dramatically. We saw major indices drop sharply, with investors scrambling to adjust their portfolios. Remember that 10% drop we mentioned earlier? Well, trading day after day showed signs of panic, with stocks swinging wildly as everyone tried to make sense of the situation. The sentiment among investors shifted from cautious optimism to downright fear. It's fascinating, and a bit scary, to watch how quickly things can change in the financial world. Conclusion/summary. So, there you have it. We've covered a lot today: the potential for a 50 basis points rate cut, the concerns surrounding inflation, and the dramatic reactions in the markets. It's clear that while a rate cut might offer some relief, it could also lead to more uncertainty. As we continue to navigate this economic landscape, it's vital to stay informed and prepared for whatever comes next. Call to action, CTA. Now, I want to hear from you. What are your thoughts on the Fed's potential rate cut? Do you think it'll help or hurt the economy? Leave your opinions in the comments below. And if you haven't already, make sure to check out my previous video on economic trends for more insights. Thanks for watching, and I'll see you next time.